Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I have Nick Fusco, CEO of PM Insights, a pre-IPO secondary market pricing company, and Evan Cohen, founder and chief operating officer with Vincent.com. It's a media company focused on alternative investments. Okay, fellas, 2025 IPOs are hot. There's two that are like in the news right now. So I wanted to hit on both of those with you guys. So the first one's eToro. So news came out that they're looking to IPO. Rumor is they could go as early as second quarter, is what I read. They also said that they're looking to go public at a valuation that's north of the $3.5 billion round that they did in March of 2023. But my buddies over at PM Insight have them at 8.7 billion. Okay, in the secondary market. So it's up like 149%. So it'd be interesting to see where this IPO happens, if it does, of course, happen. And as you both know, eToro is a fintech company. They do like crypto trading and stock trading. They got 38 million users in 75 countries. So I want to open up to you guys. What do you guys think of eToro? Like, we've been talking a lot about AI and space and all this other stuff, right? We haven't talked about fintech a lot lately, right? Like old school fastball down the middle fintech, right? So like eToro, I mean, they do a lot of stuff in crypto, I suppose, right? eToro, but
Definitely
interested in what you guys think of the company, what do you guys think of fintech, just maybe a touch on fintech and both. But go ahead, Evan, start us off, man. What do you think?
So excited to talk about fintech. It's been a rough couple of years before people actually really want to talk about this stuff again. So That's great. I actually know the founder. I think his name is Yossi from eToro. I met him years back. We share a number of investors. If you remember, this is a company that was supposed to go IPO in 2021, and they were supposed to go. I think at that point they were doing 1.2 billion,
right?
Yeah, it was like a SPAC. It was going to be a little over $10 billion valuation.
Big. Yeah, big.
They were doing over $1 billion in revenue, 1.2 billion. And then as the market started to, I guess, crackle a little bit and crack, they brought it down to between 8 and 9 billion. But ultimately 2022 happened, and that was the last time we all talked about fintech. So I'm glad that we're back here. I think that, look, the brokerage business is a very interesting business. It's been totally disrupted since Robinhood decided to make everything commission free. And so all of these brokerage platforms do need to find other business models or business lines where they can really generate revenue. And I would say that eToro's got a really strong one because the crypto business, which is, I would say, probably 60 to 70% of the trading that the app really does, is substantially higher margin and better value, and like it generates way more money, and it has way less overhead than the traditional equities and securities business, which they also offer to a number of international companies. So I think it could be a very profitable business, and I do think going IPO sometime in the near future, maybe they're a little bit too late to the game, but sometime in the near future is the right move, because as we know, these fintech companies, they are very cyclical in their momentum. And so right now, crypto's hot, equities are hot, risk assets are starting to come back. So that's all great. And so if you're a brokerage platform going IPO right in the thick of that, while you can show that chart going up and to the right, is going to be a good opportunity. Better late than never. At the same time, I do find it a very commoditized business. I think there's a number of competitors that are doing very well, and so we'll see. I would not invest in any crypto brokerages. I think that that's a business that's definitely going to be compressed with fee margin as the regulatory clarity becomes clearer. But I'm totally not surprised that they're going to go IPO. And as we've seen on the show over the last year, every IPO I predicted has gone the opposite way. So maybe don't listen to my advice on this one.
Got it. Nick, what do you think, man? eToro.
I'm pretty interested. I think they do differentiate from some of the other players out there. I would actually compliment what Evan was saying about Robinhood. I actually see them as a nice complement to Robinhood, though they're 20% of the size if you use that 8 billion figure. And yeah, to be fair, crypto is a nice complement, but what they're touting is really very much that community where it's not just, Evan, did you say it was about 35 million users?
Yeah, 35 million users.
Okay, so that user base is actively engaging with the platform in more ways than just someone logging into a Fidelity account, a Robinhood account, and so on, because they want to complement each other. There's a lot of transparency in and around how they're transacting across whether it's currencies or stocks or crypto. And they did get not the first mover advantage, but they were an early mover for the crypto. So we're riding the wave of fintech. We're riding the wave of increased M&A activity, better IPO environment. So maybe there's going to be increased competition to want them to be part of another platform, a bigger player wanting to have a piece. And yeah, with crypto markets at an all-time high, it doesn't hurt.
Yeah.
So yeah, I'd be rooting for it. I don't feel ultra confident, even though our own data suggests that the IPO is like spot on for pricing.
Right.
I think I want to watch this one come out the gate and then make some decisions thereafter.
Yeah.
But I think
I'm
it's probably
dying.
fairly priced, right?
I'm with you guys. Like, I'm dying to see the S1, you know what I mean? The full financials, and see if it's profitable and what the historic, like Evan, to your point, I think they had a huge run up when all the, like everybody was going nuts in crypto, big revenue pop. Robinhood had that too, right? And then
Yeah.
when that all kind of pulled back, they had a huge like vacuum suck of revenue, loss. So I'm interested in the financials. It is interesting though, like the number of countries that they operate in is a differentiator, right? I can't say that I know a lot of financial, I mean, outside of like the huge mammoth, Goliath ones, the JP Morgans and the Goldmans of the world, right? That are operating in that many countries, like, but fintechs, maybe
Because
Revolut,
they
right?
were
For banking.
originally Israeli based, right?
Mm-hmm. Yeah,
Correct.
As
Or
the
they
that's right.
founded
HQ.
Israel.
So right. So that probably adds the benefit there,
Yeah,
as opposed
yeah,
to
yeah.
starting in the US and be like, oh, we're already in a great big market. Why do we need to go anywhere else?
It's
So
true. It's
yeah.
true. Yeah. So I mean that to me seems like the one interesting play that they have is the number of countries that they operate in, right? And so, but we'll see. I think the devil's in the details in that one. You got to see the S1, right?
Just
So
for reference here, I don't know if you saw that Robinhood published their Investor Day information. So they only have 24 million funded accounts. So on an account basis, eToro is actually larger. And when you look at the narrative that Robinhood is talking about for their growth trajectory, and their stock has been on fire in the
right,
last quarter, they're
right,
really saying that their view is that the millennial, Gen Z, and Gen whatever after that, all the younger players, they are avoiding the traditional players, and there's just
right,
it's just the next wave of financial service providers are just not going to be the legacy players, and so
right.
that's a great opportunity. And I think eToro, to their narrative, is similar. Not to mention that they're taking that ability to invest, the ability for individuals to control their investment portfolio to the international level, which those folks have never even had access to U.S. equities, let
Okay.
alone the ability to invest themselves. So it's a huge
Yeah.
TAM opportunity.
So maybe I didn't even think about bringing this up around eToro, but so Robinhood. But since you brought up Robinhood, they just bought Trade PMR. Do you guys know this company, Trade PMR?
Oh yeah,
It's like
40 bill.
Yeah, it's like a Schwab, Fidelity. So if you're like an independent wealth management firm, you use like Schwab or Fidelity as brokerage for your clients' assets, right? So you're the investment advisor, but they open up accounts at Schwab or Fidelity or Pershing or Goldman, right? Those are kind of the four big players. It used to be TD Ameritrade, but Schwab bought TD Ameritrade. And that's where they have their actual brokerage accounts. And then these financial advisors sit on top of that and like manage the accounts, right? So Trade PMR was like a smaller player, right? In that group that these independent wealth management firms, and Robinhood bought those. And the buzz that I heard is that they like, this is interesting. They want to take like Robinhood self-directed clients and refer them to the human financial advisors, which is such an interesting concept. Because so look, like Schwab and Fidelity both have these like wealth advisor platforms where like the branch guys or the online guys can refer business to the financial advisors, and then Schwab and Fidelity get a cut of the business. It's actually a huge driver of growth for those independent wealth management firms. So it sounds like Robinhood's trying to do their own version of that with these Trade PMR guys. But it'd be interesting to see if these like Robinhood customers actually want a human financial advisor.
Absolutely. And
I
think that they probably will as they mature, right? At the end of the day, they start with the dollars that they can manage themselves. As that compounds and the markets go up, they get wealthier. They realize they want professional management. I think, and I think what Trade PMR has got 40 billion assets under custody already, and it's basically just going to be an introduction engine, right? Like taking
Right.
person A and connecting them to person B and just building that
That's really
AUM.
interesting. Because now
Very
you think
interesting.
about it, I mean, like, so self-directed platforms like Fidelity, obviously it's Fidelity, Schwab, TD Ameritrade bought Schwab. There's eToro, which doesn't have this. Robinhood has this, right? I'm trying to think who else is out there. I mean, there's like Trade Ninja. There's a few other like really small like fintechs like this that don't really have referral programs either. So, but the big ones that seem to really scale are the ones that have these types of programs. So, I don't know if that would impact me in buying eToro stock or not.
Well,
I think I'd probably be looking more at the international
You can
growth
definitely
than
put a
the.
value on every customer though, right?
Mhm.
So every active and engaged customer does offer some sort of value. And yeah, I think whether it's not just marketing to them, it's now you're part of a funnel, as Evan
Right.
said, right?
Fair enough.
So
Fair enough.
and Robinhood says that they have 8 business lines that generate over 100 million in annualized revenue a year. And so, as
Right.
I said earlier, it's all about diversifying your business model because the commission trading business is totally defunct. And
Right.
so, if you can just expand the wallet share, and I think Robinhood is going after that, and it will be competitive. But eToro, with that international customer base, if they can expand the service offering to some of these other traditional financial services, could be a very big boon for them.
Right. Cross selling. I like it. All right. Okay. So CoreWeave is another company that's a lot of discussion around going public. And these guys are out of New Jersey. So honestly, I don't know what it is. It's something in me says East Coast firms are like ready to go public faster than a West Coast firm. I don't know why. That's just the vibe I get. Plus, these are old school Wall Street guys that run this thing. They're like old electricity commodity traders. So I just feel like that's the vibe that they're going for. But they have their last round was at 15 billion in October. They've done some other stuff recently. They're at 23 billion in the secondary right now, right? The rumor is that they're going to go public at $35 billion valuation. So what is that? That's like a 52% increase, right? From where they're currently at today in the secondary. So CoreWeave, for those that don't know, they do like, it's a cloud platform provider, like competes with like AWS, Microsoft Azure, Google Cloud, but they specifically focus on AI. So they're basically GPUs. They have like a server farm of GPUs. They offer that out to cloud participants. But so Nick, like what do you think of CoreWeave's business? And they have a lot of debt and everything else, right? Is that something that's like attractive to you? Do you think the market, or maybe a better question, do you think the market would receive this company well, right? If
yes,
it goes public.
right. I think very much the fact that they're doing these incremental funding rounds leading into any sort of IPO, and they're getting so much interest, and the price is just jumping one round after the next.
Yeah.
And in the secondary market, we're seeing it's up 200% in the last 12 months.
Right.
Yeah, I think everybody's receiving that pretty damn well. And everything they're setting out in terms of goals seem to be coming to fruition so that they can move on to the next hurdle. So I think that the market will receive this very well, especially because despite their kind of collaborations with NVIDIA, it is still slightly a diversification away from NVIDIA, where folks that are thinking about topping up or maybe paring down their position sizes there, this is a nice complement, kind of still in the same segment, complementary. So if you're betting on AI, this is a nice bet. So
Right.
I do think this will be received well in the public markets, especially because they're not completely pure play, but they're more pure than investing in Microsoft or Amazon and thinking you're getting access to AWS. Right.
That is true.
So
That is true. What do you think, Evan? What do you think, CoreWeave?
I agree. In a lot of ways. I mean, I do think there's an element of the diversification play. As we mentioned last week, though, when Amazon took the entire Anthropic round that came through, I do think that sends a signal that, if you're there's going to start to be a drawing of the lines of ownership in terms of the cloud providers. I think Google's going to get more protective. I think Microsoft's going to get more protective, and I believe AWS is going to get more protective, and that might create some conflicts for a company like CoreWeave. But at the same time, there's also a number of open source players and Grok AI and other, there's an infinite amount of probably customers that they can serve. I
Right.
do think that, when the company goes public, I wonder if they don't get out the door quick enough, could there be a little bit of a softness to it? Just because I do feel all of the chip and the semiconductors over the last few months, like last month or two, while the rest of the market is sort of caught up, I feel like they have kind of had a little bit of a stall. I think that we let those run up throughout 2024. Now the rest of the market is sort of heating up and picking up where they left off. But those,
Right.
I mean, if you look at Nvidia's shares, they've actually been flattened down over the last, 60 days. So I do think that they should get out the door soon, because I think that maybe we've been saying all year that this stuff is, the valuations are crazy. All these AI companies, they don't generate enough meaningful revenue to really, meet the valuations that we're seeing. It's all forward looking. And this is a company that really does need to have that, probably doesn't have the revenue to back up a $35 billion valuation, but will grow into that. And you need to have like the excited narrative around it to justify it.
Yeah.
It could be a nice play to buy on the dip when it goes public.
Yeah, look, this company I think has potential to go nuts in the public markets, right? Because I think, to Nick's point, since it's like that, this is the purest play AI, kind of new generation AI play, right? That's going to be available in stock. And I could see people just like, this could be one of those that like defies logic. It's just the price goes up so high. It's like, this doesn't even make, it's like a bunch of people throwing their hands up being like, this doesn't even make sense. You know what I mean? But like, people just are just salivating. Yeah. They're just like salivating. Just like if OpenAI or Anthropic went public right now, like that, it would go 2x or 3x. I think probably most people would be like, of course. Yeah. Like, no one can get their hands on this stuff in the public market.
Right.
So the first one that goes, and this is the first one that's going to go. Like, whoever goes first is going to be rewarded, I think, with huge premium, just because it's like the only thing available to really get your hands on, right? In that kind of top tier group of
and the fact that
AI
they're not tied
stocks.
up is where Evan and I were both wrong about Reddit. Like, well, we raise our hand, we're like, is this really going to go? I was like, maybe there's a bull case over the long term, but that thing just took off, right?
Yeah.
And I think
defied logic. I think it surprised all of us. Yeah.
Right. I think that this could be a similar case, though completely different company, where they come out and then they can start left and right announcing that they've done deals with X, Y, and Z companies that we haven't even thought would be great customers, and they're going to be outsized.
Right.
So I would definitely not be betting against CoreWeave on that open. Yeah. Or
go ahead, Evan. What do you
necessarily waiting for the dip.
Yeah. I was gonna ask your opinion, just because one of the things that's unique about this compared to, say, a Reddit, is that a lot the growth of early investors, holdings has just grown substantially high. And especially if you have, this is more of I would say some of the investors are a little bit more traditional than your venture capitalists. Obviously there was a little bit of a crypto early on, but I think a lot of their backers are certainly institutional, traditional financial services firms. And I wonder if, when you see that sort of gain in such a short period of time, that financial services firms are like, let's take our money off the table, right? Like, capture your gains, take the win. Like, you need to go through that, hold this through the risk there, right? You've got a triple or quadruple or 8x. And so I wonder if you're going to see a lot of insider dumping or an insider holding.
Yeah. I can speak to that personally from my SoFi experience. I mean, that thing hit the public markets and it ran up fast. It like doubled. I think it was up 150% in like 3 months, right? And then, to your point, Evan, all of the institutions sold, like everything. They sold out of their complete position, right? All the guys that participated in the pipe for the SPAC, all the existing shareholders from way back. That was a lot of shares hitting the street. And then there was like no institutional investor base either. There's just a bunch of retail folks in there whipping trades around. Then the price just went crazy. Like, you know what I mean? It was up a lot. It was down a lot. Tons of volatility. So yeah, I mean, but all of these companies that are big now, when they go public, I think run the risk of having a lot of their institutional owners kind of blow out of their positions, because it's been so long and it's appreciated so much. Right.
But this is shorter holding. I would say this company has run up so fast in the last 2 years, which is why I wonder, it's like, it almost feels like it's too good to be true. Or, hey, we made a 8x in 2 years, or
even more of a reason to sell. Yeah,
it's even more than a reason to lock in your gain versus take the risk of being an idiot.
A
lot of these institutions, though, are so thoughtful about how do we start exiting without rocketing the share price, where retail investors will act in mass. and then the volatility, as Aaron was saying, it'll whip around. So I think they will be a lot more cautious and conservative on how they exit. And I
Yeah.
would say this is probably a little bit different than a SoFi because I fully expect a lot of those institutional investors to want to stick around because this is definitely going the natural
It's like
progression.
strategic. Yeah, it's
Yeah.
strategic. Yeah, fair point. Fair point. That makes sense. All right, guys, let's talk TikTok. I'm like fascinated by this TikTok thing. Yeah, right. I know Nick's a big TikTok dance guy.
Huge.
Listen, okay. So just to recap, everybody knows what TikTok is, social media platform. Some people may not know that it's owned by a company called ByteDance, which is just a Chinese company, right? So U.S. government, and ByteDance huge. It's like a $300 billion valuation business. They just did a buyback a couple months back with their employees, $300 billion. So big company, right? Most of their revenue for the business happens in mainland China. So I have some revenue stats here. Let's see if I can pull those up. It's like 120 billion in revenue, and it was like 15 to 20 billion is TikTok USA. So it's a small, it's big, right? But it's much smaller than the broader kind of firm in total. So here's my question. There's rumors. I'm sorry. The U.S. government passed a law, Congress, and then Biden signed it, that ByteDance has to divest TikTok USA, or it has to shut it down in the U.S. Which there's like, I have questions about that in and of itself, like what that actually means to shut down. So that's number one. Number two is the Chinese government signaling like it has to approve this for ByteDance, and it's saying it's not going to approve it. And the company's actually saying that they're just going to like shut it down. They won't sell it at all, which is wild, right? So like, because I got this company at like $158 billion valuation. If you take Meta's price to sales ratio and you apply it to their revenue base, it's like Meta's price to sales is 10x. So if you take a 10x revenue multiple and you apply it to ByteDance USA, it's like $160 billion business. I don't know if it will sell that much since it's like a flash sale, but that's like what I think fair price would be for it. But like, what do you guys think of this whole TikTok situation, right? Like, go ahead, Nick. Like, what do you think? What do you think of this TikTok thing? Do you think, if you got your crystal ball out, like, how do you think this plays out?
I think Zuckerberg is pumped.
Yeah, right.
Right?
I mean, come on, Musk has to be pumped too. All these guys that run social media platforms, it's got to be, this is gold,
Right. So I think with this incoming administration, they're going to be not so excited about saying Biden was right or agreeing with some of the Biden policies, but this one might be one that floats in the favor of Elon Musk, Mark Zuckerberg, etc.
Right.
It was seemingly overnight when this happened in India. I mean, you read articles about it. It's as though the TikTokers of India, the influence there, it was frozen in time. So all of a sudden, on whatever the date was, no more posts kept coming out, and that was it. And then the proliferation of that just had to flow to other avenues. So either a local version of TikTok or Meta, Instagram, that sort of idea.
Okay. What happened? So tell me, I didn't, so India killed TikTok.
Correct.
And then, so they, people still had the app on their phone, but they just weren't getting like data through the app anymore, I suppose, right? Is that fair?
So I think if you're within India, you can't be using the app, but if you're ex-India looking at Indian influencers, you are able to see someone's progression and what they're updating you on life and how big their tree is getting or their dance is, whatever. But then it just stops on, let's say, December 31st, and that was it. So that had to have gone somewhere, that influence type thing or just the general updates on your life. And I think it's going to be a win for everyone else, even if it's just purely a political, we'll show China, and there's very little evidence that it should be divested, right?
Right. I mean, what do you think, Evan?
I think it's hard to predict because China has relatively recent examples of destroying multi-billion-dollar businesses for arguably no reason at all. And I point to the Ant Financial IPO and just putting Jack Ma in a box and not letting him do anything.
Yep.
Like, it seems like the Chinese government doesn't really have too much of an issue destroying the tens of billions of dollars of value overnight for their own happiness or whatever they want to call it.
Yeah. Yeah.
I think it would be really tragic, personally. Not that I don't even use TikTok, but I do think that I don't.
I like that tragic. Like, what would I do every night when I go home and
Well, I
sit on
just
the
think it's
couch?
tragic when you see something that like such a successful, I thought the same thing about the Ant Financial IPO, where I'm like, what a
Right.
successful business, great entrepreneur, execution, like
Right.
perfect execution, really happy customers, high NPS, and like, but taking it, political, harm just comes in the way and you just have to destroy it for totally not cool reasons. I think about
Yep.
that for any startup that just like, shoots itself in the foot from something like an unrelated business failure.
Sure. Sure.
So I think it's really sad. And I know that there's going to be a lot of unhappy customers. And I think it's definitely going to be a windfall if you run a social media platform, because
Right.
to Nick's point, the influencers on there are not going to stop influencing. They're
Right.
just going
Right.
to need a new channel or an existing channel or focus on other things. And we saw that when Tumblr went down and everyone moved over to Twitter, and we've seen it with other platforms. So
Sure.
it's just the same thing. And I think it would be shocking, and I wouldn't be surprised at the same time. But yeah, it seems like you can't like, if the United States and the Chinese government are both very stubborn. And
Yeah.
I don't think that either of them are going to budge on this one
Well,
for the
so law
happiness of
was
a bunch of
passed.
teenagers.
Yeah, I mean that's the thing that's wild about it. I mean, the law was passed. I mean, TikTok's supposedly taking it to the Supreme Court, so we'll see if the Supreme Court will even hear it, right? And then who knows how the Supreme Court will rule on it, right? TikTok's saying it's like First Amendment related issues, right? I mean, the only reason I bring this up is
do
because
any of your kids use it? I'm curious if you chatted to them about it.
Nah, we're like
They're
the
not.
kids. Like we keep all my kids off of social media. You know what I
There you
mean?
go.
Like literally all of them, right? So
Yeah, I think this is a benefit to society.
fair.
we should
I mean, you're not
pull
wrong about that.
Facebook and shouldn't say it, Twitter and all the rest. It's probably beneficial until you turn 18 and you could smoke cigarettes and use
That is
social
true.
media.
I mean, Australia just passed that law. So you have to be 16 to use social media now in Australia.
That's right.
But look, I mean, like the reason I bring this up is because if TikTok gets sold to a U.S. company, especially at like a 40 or 50 billion dollars, like there was rumors Oracle could buy it. Steve Mnuchin, who was the old Treasury Tech Secretary, was rumors he was going to buy it with some people. I mean, if they're buying this thing at 20, 30, 40 billion, like
that's a steal.
I want to invest. Like I think the thing's worth $160 billion. So like I've been talking with some of my financial advisor buddies, like, do you want to stand up a fund for this? Because all of a sudden, if there's like TikTok USA, like private pre-IPO stock, like I want to own that. That's a great investment opportunity, I think, right? I mean, there's some probably nuance about like, is the revenue going to still be there, and how is the tech going to look? Whatever. I mean, all things considered, even if they buy it at 20 billion or a $40 billion mark, I think that's a good investment. You get this China overhang off. I mean, ByteDance has like a 2x revenue multiple right now. It's crazy stupid, right? That thing should be way higher than that. Like this is an investment banker's dream. You take this thing out, it like triples, quadruples in value, right? Just from not being a part of ByteDance anymore.
But no value. You have no valuation on the talent internally, because do you think that they would stick around?
Well, my sister works there, so I think she's great.
Oh, really? You didn't? You gotta disclose that. Oh, we don't have full disclosure on this podcast. Okay, well, sorry. So,
Evan, I was actually thinking you meant the talent being the clientele.
No, I meant
talent versus the employees.
Yeah, I mean,
absolutely.
The employees,
right? Yeah, look, you could treat them just as good, if not better.
I just got to tell you, man. Like, I think this company, like, so this is funny. I was talking with an advisor. I'm like, I called my two best partners this week, and I said, do you want to stand up a fund for this? And they're like, well, what, like, do you think we could buy it? I'm like, well, I know if we don't have the cash in the fund that we're definitely not going to buy it, because this is going to be one of those things where it like happens, and then the notes will go out and you have 48 hours to sign docs and get the money in, right? Because it all happened like super fast. You know what I mean? And so I was like, we could put together a fund, we could stand it up, we could raise the money. I don't know what the price would be. I don't know what the financials look like. I don't know what's going to happen with the tech. But if you're opportunistic and you're entrepreneurial, this is it. But you got to be ready to go. So I'm like, if we're going to do this, we got to do it now. You have to do it now. You can't
Right.
wait until it's like settled and sorted, because then you
But
don't have enough
you're going to
time.
need 10 Aaron Dillons doing this exact same thing, or 20 of you,
100%.
right?
100%.
So you get a syndicate of the syndicate, and then you let it rip. But you also have to get down to DC, right?
Listen, man, you know
you
how
have to
this
make
stuff
sure.
works, Nick. This is like inside baseball and this stuff. So like they'll sell it, and like let's say Mnuchin buys it, okay? So they're going to go out with this investor group and buy it. There'll be other venture capital firms that come in on this. They won't want to buy it all from their fund, their primary fund. So they'll set up an SPV, and then they'll go out to the market and they'll say, I committed $400 million to Mnuchin for this.
Right.
I'm going to take 350 out of my fund, and we're raising 50 million in the SPV. Like, who wants a piece? And then that's when everyone piles in. But you get like a week, maybe.
Yeah.
Right. You know what I mean? To participate in that. And then it's over. So like, you can't like stand up a fund, go raise the money, get everyone to wire you the money, and then sign the docs and send it. It's too much. It's too short of amount of time, I think, in my experience. So you almost have to do it now. And then also, if that'd be highly competitive. So if you did it and you let everybody know that you're doing it, then you have a potential to participate. That is my experience of how like the inside baseball and this stuff works, right? You got to be coiled spring. So that's why I don't know. This is why I'm like hypothesize, like I'm super like what's going to happen here? Because if it does happen and it does sell, I think this is like easy 3-4x your money. Easy.
You're cool with management staying the same. Like, I just don't know who's pulling the strings there. To me, at the end of the day, if you're putting $50 billion into a company, you got to know who's running it. And
what do you want? You want the users. I mean, earlier we chatted about eToro, and I think that a huge value of that is just the user base and the way they're interacting.
They're also run by their founder.
Well, the algorithm's important, right, guys? Like the algorithm, I think, is important because that's central to the user base, right, Nick? So like if that comes or doesn't come, I think that would be probably a big deal. Because I mean, who knows what happens to the users if the algorithm's different,
I mean, you just throw more dancing, more random weird stuff. I'll rewrite the algorithm, but if it comes with the user base, that's the key thing. I mean, even if you have to shake up and poach a whole bunch of people out of Meta or Twitter or wherever else, Snap, I don't think you're buying this for management. I think you're buying this for the user base completely.
Right.
My opinion on social media is that there are one-trick ponies, and then there are social media legacy platforms. And you need to have a guy like Zuckerberg, look, Snapchat's a perfect example. Like they just haven't. They crushed what they needed to crush. They went public. They've got 80 million monthly active users, and they've evolved some of their product line. They have a relatively visionary CEO, but they still haven't been able to figure out like what the next thing is. Zuckerberg is a perfect example of like, hey, start with one thing. He sees the future. He invests heavily, and he's able to withstand these trends because social media is so trend driven. And yes, I think that TikTok is the hot player today, but so was MySpace. And we have a graveyard of social media platforms that were the darlings of their era, and then they just didn't evolve with the times. And so I want to sit there and say, even Twitter is even a great example. Like I just want to sit there and say, like, when you're buying a social media company, you need to be able to invest. You're investing 10 years out to see, hey, is this still going to be relevant?
Okay, so
you're saying
you would want to see the management team come across with it. If the management team for TikTok came across with it, you'd be like, this is something. This is something interesting.
And they're sticking around, right? Because if Larry Ellison buys TikTok, like, what does he know about social media?
Fair point. That's fair.
Why do I want to buy, or Steve Mnuchin?
Yeah, there's a lot of hair. There's definitely a lot of hair on this, though. 100%. But I would just offer this: $20 billion for that thing is a steal.
For sure. Well,
even if none of the team comes across or the algorithm's not coming across. Like there's a lot of people using that. There's a lot of advertisers advertising on that platform already. I mean, there's something you could do there, and it's certainly going to be not at a 1 or 2x revenue multiple. You know what I mean?
There's already a big moat on that. Like look at Facebook coming in, and not that Threads was a competitive strike towards TikTok.
Yeah.
But it didn't. That like picked up and then went away.
Right.
There are a lot of folks that probably had their eye. Triller complete failure, right?
Yeah.
Had their eye on TikTok, and it's also like a self-regulating thing where the folks that are putting content on TikTok are there because they want the views. So
Right.
if they're doing something that's not getting views, yes, the algorithm assists them, but they're just going to change until they get the views that they want.
Yeah.
So
Fair.
I think their advantage is they're not going to go by the wayside. So
I have my eye on this like very closely. One, because for revenue reasons, but also two, like this is just like being an you know, being a student of the pre-IPO stock market. I mean, like this is, if this thing happens and it does in fact end up having a meta like multiple where it's like 10x revenue, this is like the fourth largest pre-IPO stock in the world, a TikTok USA, right? So that's like something, it's not something to frown at. I mean, there's a lot that has to happen, a lot that has to go right for that to play out, right? But there's potential,
Yep.
So I don't know. This is just so intriguing to me. All, like we've talked about this in the past, like all these Chinese tech companies that are great, these great Chinese tech companies, they just have this like overhang on their valuations. Even the publicly traded ones, they just don't trade at the same multiples as the US equivalents do. So this is such an interesting thing to see. Like if this does in fact break off and become a quote unquote US company, if it starts to trade like all the other US companies do. And then, I mean, that could be really interesting for a lot of different reasons, but it's super intriguing,
Yeah.
Because Shein could be the same thing. Shein probably does a ton of business in the US. If they had a Shein US, right? Does that somehow unlock and you get much higher revenue multiples than what they're currently doing today? It could be, right?
Even just by the sheer fact that China can't pull the plug like with Ant, right? Just, it's not going to exist in the same capacity that it used to because we're going to pull some strings or pull the fuse. So totally agree.
Yeah.
Yeah.
All right. Well, we'll revisit this. I think it's January 19 is the go, no go date. So if they can't get the Supreme Court to, which I don't even know what that means. I mean, could you imagine what that means? If they're like applying right now to have the Supreme Court look at this thing or appealing, I guess. And if the Supreme Court says no, then they got to like do something by the 19th.
Talk about a date. That's a pretty important date too.
That's like 30 days from now. That's like nothing. Or 40 days from now. I don't know how you even, with Christmas and everything. I mean, like, I don't even know how you sell a company that fast. That's nuts. Right?
Yeah.
So
it's crazy.
Can you imagine if it shuts down? Can you imagine what the media, they'll go nuts. All the stories of the creators losing all the money and oh my gosh.
I don't want to envision a January 6th all over again where it's teenage girls storming the Supreme Court, but could happen.
It's going to have vibes of that for sure, right?
The dancing on the steps of the Supreme Court is going to be outrageous.
Dude, Americans have never had a cultural icon ripped away from them at its peak like this will happen, right?
Well, in a software game for sure. No.
I mean, this is going to be, I can't think of another time where something, like not in my lifetime, not my 44 years on this planet, where something was like, everybody loves it, everybody does it. And then the government just comes in and says, nope. Like it's done.
Basically, like what about Juul pods?
Well, that's true. E-cigarettes, that's true. You're not wrong.
They were just like, it was like everywhere. No,
were you
never
a big Juul guy?
No, I never did. But I'm just thinking of like the last time that the government intervened on like a cultural phenomenon. And everyone was obsessed with it. And they're like, by the way, you can't buy them anymore. Sorry.
That is true.
The mango ones aren't cool.
That was a $32 billion valuation business that they just literally wiped off the face of the map. So I guess the U.S. government can do it too, right, Evan? You know what I mean? That door swings both ways.
The lengths that this government will go to protect its people.
Amen. Right?
Just evaporating market cap. Everyone's poor.
I love it. All right, fellas. Well, we'll keep an eye on good old TikTok, but 2025 could be the year of IPOs.
Totally. Could be.
It's going to be interesting to see how this goes down. This is going to be a big one. It's going to be fun. But okay, fellas, I appreciate your time. Yeah, man. I appreciate you guys.
Cheers, guys.
Cheers. Cheers.